Hello, everybody.
Hey everyone, welcome. This is Kent Island Kathy Higginbotham with Coldwell Banker. Today I'm excited to have Anthony Reno. He is a local lender here on Kent Island, and he is going to share with us the pre-approval process for home loans. You probably keep hearing that the market is hot. Buyers need to come pre-qualified, having strong offers, and we just wanted to take a couple minutes to break that down for you, to share with you what that looks like and how you can get pre-approved. First of all, thank you, Anthony, for agreeing to join me on a Friday and your birthday.
Absolutely. So, thank you.
Happy birthday. Why don't you take a second to introduce yourself and share with us what you do?
Well, I'm Anthony Reno, Nation's Reliable Lending right here in Kent Island. Been locally here for over 20 years lending. And today I'm glad Kathy asked me to come on board with this this video to discuss pre-qualifications and pre-approvals. Especially in a market like right now, it is a hot market. You know, moving into the summer with people coming out of school and rates being so low, it's, I guess, a fantastic time, you know, to be doing this. But want to make one thing clear about when you venture into the purchase market. One thing you really want to look at is there's a difference between pre-qualification and pre-approval.
Right.
Give an example. If Kathy were to call me on a Friday night and says, I'm sitting with a customer right now, they want to venture out and look at a house, they have never talked to anybody, you know, we'll do a quick application, and based on a general conversation, and if you could supply some type of document to me, we'll do a pre-qualification. You know, do you really want to be pre-qualified, or do you want to be pre-approved? And what I mean by pre-approved is we jump on the bandwagon early as to see how much, you know, you can get approved for and find out what your comfort zone is, payment and rate wise. But it's when you do a full application, we go through the details of it and we collect all the prudent information, your tax returns, your W-2s, if there's child support, if there's student loans. We dive into the thing because FHA, Fannie Mae, Freddie Mac, VA, and USDA, they all have a software engine that we run the parameters through a loan through. And it'll come back with the status called approved eligible. But it'll give us some of the details as to what that specific agency may ask for the approval for the loan. Once we come back with an approved eligible status, and I can look at the information and send it in, now we can send a pre-approval out. That gives somebody like Kathy a lot more ground to stand on when she's making a legitimate offer to somebody, because we have viewed all the documents. You know, there isn't going to be that skeleton in the closet, you know, that you hear the horror stories from 1 week prior to settlement, something's blowing up. It's the most key point is, and getting pre-approved is simple. It really is. It's not a hard process. We make it easy here, but you really want to get pre-approved, not pre-qualified. So with that said, it gives you it gives you the opportunity to put in a valid offer, and it has more substance when you can walk into a place with confidence with a pre-approval letter versus pre-qualification. But it's time to do it.
I think it's, you know, obviously part of the pre-approval, pre-qualification, they'll get a budget of how much they're approved up to.
Correct.
And
you know what, Kathy, I'm glad you said that, because, and here's one thing that consumers need to be careful about, is because, you know, we're asked so many times in the industry, what's your rate? Well, rates based on credit, rates based on the type of property, and based on the down payment. Perfect example, I could talk to somebody on a Friday night, because I answer the phone at all times, and I've talked to people 8 o'clock on a Friday night driving down the road, and we'll qualify somebody. I'll pull over the side of the road, and if they're looking at a single family home for $300,000, but then all of a sudden they switch over to, let's say, a waterfront condo at the same price, the taxes change everything. The association fees change everything. So there's a lot of nuances to the pre-approval process. And it goes back to what I was saying is, don't get pre-qualified, get pre-approved.
Absolutely. And I always try and have my buyers understand to kind of work backwards. Like, what payment are you comfortable with? And then let's figure out what that means purchase price wise.
Correct. Yep. I agree with you on that.
So as far as like getting pre-approved, what are the things that someone will need to give to you? You know, what kind of questions might you ask during that, you know, conversation if they call you on a Friday like today?
Well, yeah, well, the world's become so technology driven that, 9 times out of 10, my clients will do their application through our software site. But I like to follow up with a phone call to get into the details, because there's a lot of things that consumers, because they don't purchase houses all the time, they miss in the application. So you really want a detailed application. And that's, again, what I can run a scenario through DU, which is a Fannie Mae automated approved underwriting engine, and it'll come back and tell me what I need out of that client, income doc wise, to move forward with the loan. Preliminary, I really do, even though one of the automated engines may not ask for tax returns or particular loans, I still want to get them, because it gives you a better picture of what's going on. And like, again, underwriter's job is to make sure that the investor is not at a risk, as well as approving a loan that's healthy for the consumer. So there are things that could get found out at 4th and 10, in the fourth, on the goal line, and you just want to be able to see everything up front. Not necessarily what I need them, but it's healthy to see them. W-2s, last 2 pay stubs, last 2 months bank statements. If there's child support, whether you pay it or you're receiving it, it has to be paid 12 months in continuous to be able to use it as income. So if somebody's receiving child support and somebody missed 2 months payments, I can't use it, unfortunately. So those are the kind of things that you really want to get into a verbal conversation with, and don't hold too much faith as the application that comes online. You really want to talk to your loan officer and dive into it. And it doesn't take long. It's just a very good conversation, and that way both parties can build that communication of trust, and we both know where we're going, moving forward.
Okay. So as far as, to get a pre-qualification and have that, do they need to have, is there certain credit scores that they should have, or?
If you're looking for conventional loans, and the old philosophy, the mentality is, I think, in the general public, that to go to conventional loans, that you have to have 20% down. No, there's home ready products out of 3% down, but you do need a little stronger credit score, 640 and above, for Fannie Mae and Freddie Mac to start, looking at the files. You can go below that with FHA. FHA, you can go below 580 with FHA, giving certain parameters such as time on the job, assets, 401ks, money in the bank, tangible things that the bank can look at and turn their head if there happens to be some bumps and bruises. And that does happen. I always say bad things happen to good people. So, and we're all willing to work with those people as well, because everybody's deserving of a home, and you never turn anybody down. It's not that you can't buy, it's when you can. And, working with people, sometimes it takes something as easy as taking yourself off credit as an authorized user, or paying down $100 on a simple credit card, and to move your score into a conventional product.
Wow.
Yeah.
So as far as, how much do you feel like they need to have to buy a home? And I know that's going to vary based on the different loan program, but overall, I know like USDA has 100% financing, and, my job is to help negotiate closing costs.
Right.
But overall, is there like a number that you feel is, or a percentage good for people to have, to be able to put down or to have in the bank?
Well, the criteria for a lot of, like, for conventional loans, there's a home ready loans, 3% down, then they start at 5, 10, 15, up to 20%, but those all have a mortgage insurance premium attached to it. Obviously 20% down doesn't. FHA requires you 3.5% down, but there's a lot of other programs out there in Maryland that will aid in that 3.5% down as well. VA and USDA are 100% financing of the sales price. One thing I think a consumer should look at and want to hope for is, besides having the money down, understand the costs that are involved in the loan up front.
Okay.
A lot of times that, when I talk to a consumer and they'll send me a bank statement, and I can source the 3.5% down, let's just say it's a FHA loan, but I already know there's the house that they're looking at is on a well and septic. I know I'm going to need a well and septic inspection. Home inspections aren't required, but highly suggested. The appraisal fee, and if it's there's so many fees that get involved that once they start getting into those, the sourced money that I have from my down payment starts to trickle away. So I like to add those, I like to have that conversation during my application process to forewarn them. But it's also good for a consumer and just it's smart to have at least 2 months reserves in the bank in case in the event something happens. You don't want to go into a house destitute. So.
Right. And one thing, not really new to the consumer is that, we could make an offer today, have a settlement in July, and then they don't have their first mortgage payment until September.
Correct. Yep. Yeah.
So, a lot of people think that they have to, like, if they're making this offer, that they're going to have to start paying right away, or, so I think that is, people are always shocked when I share that. I'm like,
yeah. Yeah, especially when somebody says I'm in my rental property until, I have to make my July. At some point in time, there will be that reprieve where they won't have to make a, housing payment.
Right.
But it is a good market to do this right now. Rates are extremely low. They're aggressive. And, lenders are aggressive now too.
Oh, yeah. And I'm definitely seeing, we're seeing multiple offers. So having a strong offer, having that strong lender letter, it definitely makes a difference, as a listing agent. When I have offers coming in, there's multiple offers, and I see the different banks,
mm-hmm.
and I can say, well, this one has a tendency of not getting things done on time, or,
right.
This guy's local. I feel confident that he can get it done.
Absolutely.
Definitely weighs in. So, definitely want to put that out there, that what the package that you present, it's not just have a letter. You don't want just a letter from anybody. You want a strong letter that's going to really show value.
Right. Because it goes back to what we were saying earlier in the conversation, where you can get pre-qualified, because a lot of people, the consumer, may be worried that house is going away because the listing agent may have told you we've got multiple offers coming in, or a few more appointments tomorrow. So the consumer wants to hurry up and put an offer in. And what happens is they haven't done the full application, or I would say I consider full applications after they've spoken to me. I've seen the ones online, and that's completely fine, but I want to dig into the nuts and details of it, because there are the things that there's parameters that can come out and say, well, I didn't know this because we had never covered this, and this adds several $100s more to your debts, and I don't think you're going to be qualified for this unless you reduce the sales price offer, and now you're not going to get it because it's pretty much a bidding war.
Yeah.
So that's why it's so important to get the pre-approval, not the pre-qualification.
Absolutely.
That doesn't, it doesn't pertain to everybody. You have somebody with an 800 credit score, they make $200,000 a year, they're only looking at a $250,000 house. Do we feel something's going to go wrong in that situation? Absolutely not. But if it's a first-time home buyer, second-time home buyer, and we're at the edge of where the debt ratio allows for that particular loan product, you don't want to make a mistake.
Right. So I have your number on here on the bottom of the screen. That's your cell phone. So start blowing up. Awesome. Is there a way that people can reach out to you as far as to start the conversation?
Yep. And I'll make it easy. And it's not hard. And what's nice about it is when you have a lot clear communication up front, and you know what to expect, the process actually is easy. But it's when we do shortcuts in the beginning, short applications, and we just start, then it becomes kind of hectic.
Right. So how can people get in touch with you in addition to your cell phone? Is it, you have your
Anthony.Reno@nrl.com. And you can also reach me. You can actually hit me on Facebook as well, or message me. Mm-hmm. You can call and text me all weekend long. I'm always available.
Awesome. Well, I appreciate it, Anthony. I won't hold you up anymore on your birthday.
All right. Thank you. I appreciate it.
Is there anything else you want to add before we jump off about loans or,
No,
tips?
you know what? I think we're all seeing it. We're all really busy right now. And I know there's a lot of people out there thinking they may not be able to buy. I think they should jump into the market and see what, and see what can happen. I'm fairly confident they'd be surprised. And make sure you look up Kathy. She's awesome. You sold one today.
Yes.
You just had to sell it this morning.
Signed off and settled. So
Good.
celebrate that today too.
No, it's a great market. Everybody should be getting in right now. I mean, the rates are historically low again. And like I was telling you about the automated underwriting engines through all the, the agencies, a lot of these are coming back. The findings, they're called findings when you get the approved eligible set. The findings coming back with, not a lot of documentation needed. So the process is getting more and more streamlined. And everything's, like I said, tech savvy. And if I'm not that tech savvy, thank God I got my daughter on hand for me, but she works here. And, but people can upload things from their phone. They scan things with their phone, send them right to the file. So they've made it easy. I just suggest everybody start. If you're interested, now's the time.
Yeah. It's a great and
Absolutely.
all right. Well, enjoy your day. Thank you again.
Thanks, Kathy, for having me. See you, everybody.
Bye.
Bye.